Well, let's move on then. Let's focus on the India economic data. We were talking about the US economic data, which is looking red hot, and that's a worry, and the yields have gone up. But out here, things are looking good because India's September CPI came in at around 5%. That compares with our poll of around 5.5%. And also, we had the August industrial output number that came in around 10.3%, which is higher than we're working with. Latha joins us to tell us how she's reading the data. Well, Latha, it looked quite good, right?
Well, it was a double delight when it came to the macro numbers that were announced yesterday, both on the inflation and on the growth front. Inflation lower than expected, growth higher than expected. What more can you ask? But to get to the inflation number, which is more crucial for policy making, at 5%, look at the way in which it's fallen month on month, 6.83 the previous month and 7.44 in July. Clearly, that tomato-led spike now looks like a clear one-off. And in particular, you go away from the headline CPI and go to the food CPI. The fall is really important. The food index has fallen even month on month by 1.8%. And year on year, again, the slope is very steep. It has come at 6.56 for September. It was at 9.94 in August. And it was 11.5% in July. So consistent fall. And now there is even a month-on-month fall in the food index. Like I told you, 1.8% lower. The one that's most responsible for the fall in food prices, vegetables, down 15.8% month-on-month. So the big worry is clearly over on food inflation. The one that has always been doing well did even better, and that's core inflation. Core inflation is down to 4.5%. From 4.8% in the month of August, and it used to range at about 6% in January. And core inflation is sticky, takes time to come down. The fact that it's at 4.5%, pretty close to the Reserve Bank's 4% target, makes it an extremely important number. But let me point to just a couple of areas of worry. They are basically pulses and cereals. Pulses are still up 16.4% year on year. And even on the month, it was up 4%. Important ingredient of the Indian thali. Likewise, cereals up 11%. So one would worry about pulses and rice, whether going forward we're able to keep it under check. Spices are 23%. You can't do that. You can't do anything about it in a year or in 6 months. But they are a small weight in the CPI. To that extent, we can proceed. But the important point is coming in at 5%. Now, most of the economists whose full year CPI was way ahead RBI's forecast of 5.4% are all now bringing down their forecast closer to the Reserve Bank's full year forecast. But the big question for the bond market will be, having got this 5% CPI, will the Reserve Bank soften its open market sale of bonds, which it announced in the policy? That much may be too much to expect because the Reserve Bank always expected only a 5% inflation in September. It's come according to their expectations. So the market mulling this, we will have to see how it reacts. But clearly, very bond positive number, although the US number is not bond positive. Both PPI and CPI in that country have come in higher than expected. But one big worry less for India. Quickly on growth, 10.3% August industrial output. Let's not take our breath away and become too overconfident. This is largely because the year ago number was minus 0.7. So on an average, if you take year to date, we are still around that 5% industrial output growth. Again, consumer durables looks excellent at 9%. But then that was because year ago in August 22, it was minus 9%. So we have not made much progress in terms of production, except for capital goods. Capital goods are really taking it away. 12.6%, not on a bad base, 4.3% base. So capital goods, as we all know, capex is doing very well. But we can't say as much about consumption items. So growth, good. Inflation, very good.
Right, growth good and inflation, very good. The question is, how much of that will be impacting the RBI policy? How much the global news will impact what they do as well? With that, we'll send you to a short break. Thank you so much for that, Latha.